vertical and channel of Unacademy that caters to the students of CA Foundation and Intermediate in their journey and pursuit of preparation for the CA Foundation and Intermediate examinations by providing top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. Welcome to the session once again. Let's move on. Before we proceed, a brief introduction about the educator today. Hello, I'm Prathik Gupta. I am a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, and an associate member of the Institute of Company Secretaries of India, and also a law graduate from Karnataka State Law University. I'm currently a practicing chartered accountant and also a visiting faculty for CA subjects and an educator for CA students both online and offline. Prior to starting on my own, I worked with S.R. Bartley Boy & Associates, that is the Indian member firm of Ernst & Young Global in the Audit and Assurance Department. Then I went on to work with E&Y India in the Mergers and Acquisitions Department. And then finally I went on to work with the Manipal Group in Bangalore as the corporate controller of the Indian entity as well as the German subsidiary located in Frankfurt, Germany. It was only after I got back from Frankfurt, Germany that I decided to start something on my own, and that also gave me an opportunity to become an educator, which in turn has given me this opportunity to take this session for you young, bright and enthusiastic CA aspirants. Thank you so much for giving me this opportunity, and I hope you find the session useful. Anytime during the session, in case you have any questions, queries, observations or discussions to be made, please do not hesitate to drop in a line and I will take up the matter for problem solving or for discussion purposes, as the case may be, as soon as possible. I would also quickly like to draw your attention to my name and the spelling of my name. My name is Prathik Gupta and it's spelled as Prathik. Now, why I'm stressing on the spelling of my name is because a lot of people misspell my name, due to which they are unable to view my numerous classes on the YouTube channel of Unacademy, as well as my special classes on the Unacademy Learning app. So you can look me up with my name, that is Prathik Gupta, Prathikgupta, and you can find my many classes on the YouTube channel of Unacademy and many special classes on the Unacademy Learning app that will help you in your preparation for the CA Foundation and Intermediate examinations. Let's quickly move on. Now, like I told you, Unacademy caters to you in your preparation for the CA Foundation and Intermediate examinations. Now, it does so through three platforms, that is your YouTube special class as well as the Plus platform. Now, YouTube and special classes are absolutely free of cost, but they provide you a tremendous amount of value and resources to help you in your preparation for the CA Foundation and Intermediate examinations. YouTube is what you're watching right now, where you just need to go on to the YouTube channel of Unacademy and type in Prathik Gupta, and you can see all my sessions there, which will help you in your preparation for the CA Foundation and Intermediate examinations. Special class are classes available on an app known as the Unacademy Learning app, more about which I will tell you in the following slides. But special classes are also free of cost, but they provide you an amazing amount of resources to help you in your preparation for the CA Foundation and Intermediate examinations. And coming to the Plus platform of Unacademy. The Plus platform of Unacademy is the premium platform of Unacademy, that is a payment-based subscription model and which provides various subscription packages for the various examinations, more about which I will tell you in the following slides. But in this slide, I will tell you quickly why I recommend and encourage you to become part of the Plus platform of Unacademy as soon as possible. So the first reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the daily live classes where you get to chat with your educator, engage in discussions, ask your doubts and answer polls. All this while the class is going on. The second reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the live tests and quizzes it conducts on a regular and periodic basis, which help in evaluation of your preparation and also get a detailed analysis of your performance. The third reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the structured courses it provides, as all our courses are structured in line with your exam syllabus to help you best prepare for it. And lastly and most importantly, the reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the unlimited access it provides, where one subscription to the Plus platform gets you access to all the live and recorded courses to watch from the comfort of any of your devices. So keeping all these advantages among many others in mind, I strongly recommend and encourage you to become part of the Plus platform of Unacademy as soon as possible in order to accelerate and enhance your preparation for the CA Foundation and Intermediate examinations. Alright, now let's move on. Now in the previous slide you heard me say live and recorded sessions. So those live and recorded sessions are live and recorded special classes as well as live and recorded plus courses. So if you're wondering where they are available on an app known as the Unacademy Learning app. So for all of you who have downloaded the Unacademy Learning app and are using it, I thank you very much, and I request your support in the future as well. For those of you who have not yet downloaded the Unacademy Learning app, I request you to go to your Play Store, download the Unacademy Learning app, install the Unacademy Learning app on your phones, install the Unacademy Learning app on the phones, put in your mobile number where you will get an OTP, and using that OTP you can register on the Unacademy Learning app. It is as simple as this with no lengthy or complicated procedures. Now you might ask me, okay, you've downloaded the Unacademy Learning app, you've installed it, you've registered on it using the mobile number and OTP, so what's next? So let me tell you that the Unacademy Learning app gives you access to all the live and recorded special classes to help you in your preparation for the CA Foundation and Intermediate examinations. And not only this, it also gives you access to all the live and recorded plus courses that Unacademy has to offer to you in order to accelerate or enhance your preparation for the CA Foundation and Intermediate examinations. So I request all of you to download, install and register on the Unacademy Learning app as soon as possible so that you can make use of the world of resources that Unacademy has to offer to you to help you in your preparation for the CA Foundation and Intermediate examinations. Alright, just take about 10 seconds, go through this. Moving on. Now this is an important slide. Now, like I told you, Plus platform of Unacademy is the premium platform of Unacademy, that is a payment-based subscription model and which provides various subscription packages for the various examinations. Accordingly, the CA Foundation and the Intermediate subscription packages provided by the Plus platform of Unacademy are as follows. The packages provided are for 1 month, 3 months, 6 months, 12 months and 24 months. The 1 month package will cost you rupees 3,500. The 3 months package will cost you rupees 8,750. The 6 months package will cost you rupees 14,000. The 12 months package will cost you rupees 17,500 and the 24 months package will cost you rupees 21,000. Now please note that these are the list price of the packages. So before you make the payment for the package of your choice, please do not forget to use the code Prathik. Just hold on a second. Please do not forget to use the code Prathik. Prathik to get an instant discount of 10% on the above listed price. I repeat, please do not forget to use the code Prathik to get an instant discount of 10% on the above listed price. So the after discount price of the various packages will be as follows. The 1 month package will cost you rupees 3,150. The 3 month package will cost you rupees 7,875. The 6 months package will cost you rupees 12,600. The 12 months package will cost you rupees 15,750. And the 24 months package will cost you rupees 18,900. So you see immediately you're getting a savings of 10% when you use my code. Now I personally recommend you to start off with the 12 months or 24 months packages for 2 reasons. Firstly, it is cost effective. If you compare the 1 month package cost with the per month cost of the 12 months and 24 months package, you will see that you're getting great cost savings almost immediately. And secondly, and most importantly, since the CA Foundation and Intermediate course is provided to you in one package, that is your 12 months or 24 months, a 12 months or 24 months package will be highly beneficial to you because it covers the duration of both your courses, that is CA Foundation and Intermediate, which normally take about a minimum of 12 months for you to prepare and clear. So if you're getting a package that is 12 months or a 24 months package that covers the duration of your CA Foundation course as well as your Intermediate course at a very cost-effective price, I think that is a very good deal. But having said this, you're free to choose the package of your choice. But before you make the payment, please do not forget to use the code Prathik to get an instant discount of 10% on the above listed price. You can also make use of the no-cost EMI options available for the 6 months, 12 months and 24 months packages just in case you do not wish to make the payment at one shot. And the other payment options are internet banking, debit card and credit card, and also all the coins that you've accumulated by watching the special class can be redeemed while making the payment for the plus courses. So keeping all these packages in mind, these incentives, these discounts and also the advantages that I told you a couple of slides earlier in mind, I strongly recommend and encourage you to become part of the Plus platform of Unacademy as soon as possible in order to accelerate and enhance your preparation for the CA Foundation and Intermediate examinations. Alright, now like I told you, the special class, the Unacademy Learning app gives you access to all the live and recorded special classes. So here are the snapshots of few of the many special classes that I have conducted on the Unacademy Learning app, which you will find useful in your preparation for the CA Foundation and intermediate examinations. There are special classes on revision test paper, Sale of Goods Act, Indian Contracts Act, the Companies Act, Fundamentals of Accounting, Retirement of Partner, Admission of Partner, Death of Partner, Valuation of Inventories, revision on final accounts of non-manufacturing entities, and revision on sale of goods on approval or return basis, and many more. So all you need to do is just log into the Unacademy learning app, go to my profile, Prathik Gupta, and you can access and make use of the hundreds of hours of special classes that I have conducted there exclusively for your benefit. Alright, let's move on. Now here are also the links to few of the many special classes that I have conducted on the Unacademy learning app. You can either click on these links or copy and paste these links on your browser to take you directly to the special class on the Unacademy learning app. Okay, there are special classes on the Indian Contracts Act, the Sale of Goods Act, the Indian Partnership Act, the Limited Liability Partnership Act, the Companies Act, Basics of Communication, Accounting Concepts, Revision Test Papers, and many more. So like I told you earlier, please log into the Unacademy learning app, go to my profile, Prathik Gupta, and you will find all the sessions that I've taken there exclusively for your benefit. So please go on to my profile, make use of them, and after going through them, if you have any questions or queries, you can always come back to me. Alright, now let's talk about an important topic, that is the lifting of corporate veil. This is an important topic from your exam point of view, as it's been asked quite a bit as well, and this forms part of your Companies Act 2013. Now what do you mean by lifting of corporate veil? Before we get into the discussion, lifting of corporate veil means a sort of a curtain or a blanket or a protection that is given to the members of a company, private limited or a public limited company, from the wrongdoings or the liabilities or the debts of the company. Okay, so basically a company is a separate legal entity the minute it is incorporated. So then it becomes a separate entity, separate from its members. The members and the company is not the same. So tomorrow if there is any liability or a penalty on the company, that is the company's alone and it does not pass on to the members. So a lifting of corporate veil is like a brick wall or a curtain between the company and the members. Okay, so the members are behind this corporate veil or this brick wall and they are protected by this concept of corporate veil. Okay, so any liabilities. Now what are they protected from? They are protected from the liabilities of the company. They are protected from the debts of the company. They are protected by any penalties or any wrongdoings of the company. So this brick wall protects the members from this liabilities, debts and penalties and the wrongdoings of the company, and then the company alone is responsible for it. The members cannot be held responsible for it. So this is the biggest or one of the biggest advantages of a private limited or a public limited company incorporated under the Companies Act, that the members are protected from the liabilities and debts of the company and the members have an unlimited or the members have a limited liability. Okay, so this is the whole crux of what we are going to do today. So let's move on. Now, the company, let's start off with the meaning of a company and its features before we get into what you mean by corporate veil. Section 220 of the Companies Act 2013 defines a company. Company means a company incorporated under this act or any of the previous company law. So the Companies Act 2013 came into existence in about 2013 or 14. And before that we had Companies Act 1956. So the Companies Act Section 2 subsection 20 of the Companies Act 2013 defines a company as incorporated under this act or any other previous law. So a company is a company which is incorporated under the Companies Act 2013 or the Companies Act 1956, or if there was any Companies Act before that, even if a company was incorporated under that, it will fall under the definition of a company under the Companies Act 2013. Okay, this is the definition. Then we go at the features of the company. This is important. Separate legal entity. Separate legal entity means the minute a company is incorporated as ABC Private Limited or ABC Limited, it becomes a separate legal entity, separate and distinct from its members. The members and the company are not the same. Now, for example, if you take a traditional partnership, A, B and C come together to form a traditional partnership known as ABC Enterprises. Now, in the traditional partnership, ABC Enterprises and the partners ABC are the same. The debts of ABC Enterprises are the same as the debts of ABC. So, there is no distinction between the company and its members, partners, but in case of a company, private or public, there is a major distinction between the company and its members, as a company is a separate legal entity. Okay. The second point is perpetual succession. Perpetual succession means the members in a company may come and go. The directors may come and go. The shareholders might transfer the shares to 100 different people. The shares might be freely transferable. But that does not mean that the company comes to an end. Once the original members who had started the company, they leave, it does not mean the company comes to an end. A company has perpetual succession means because it has been started by a legal process, a company will continue to survive and remain until it is put to an end through a legal process as well. Okay. Then a company has a limited liability. Limited liability means the members of the company are limited. Our liability only is limited to the extent of if it is limited by shares. If the company is limited by shares, then the liability of the members is only to the extent of unpaid amount on the shares held by them. If it is limited by guarantee, then the liability of the members is limited to the amount that they have guaranteed in the MOA as the amount that they will contribute in the case of liquidation of a company. So this is one major advantage of a company over a traditional partnership or a proprietorship, where there is a limited liability of the members. There is no unlimited liability. Artificial jurisdictional person, like I told you, company has come into existence through a legal process. It has not come into the world like you and me, like birth. It has come through paperwork and legal process, so it can almost do whatever we can do. Almost means it can file a case can be filed on it, it can hold properties, it can enter into contracts, and other things like that. But again, like you and me, it cannot marry, it cannot get divorced, it cannot practice a profession, it cannot go to jail, because that is only for natural individuals, okay, like you and me. So to a large extent, they can do almost everything what you and me can do. But yeah, of course, there are limitations to it, as it is an artificial jurisdictional person. You cannot see a company, it's on paper, and it is managed by the agency of people. And a common seal is employed by the company to enter into contracts on its behalf. Whenever the company wants to enter into contracts, it can enter into through its common seal, which is in the possession of responsible people in the company. Alright, please take 2 minutes, go through this, and then we understand each point in detail. Any questions, please ask me. Please take a couple of minutes. Any questions, please ask me. Please take another minute, go through this. Any questions, please ask me. Let me know once we are done, please, all of you. Are we done? Okay, just take about 15 seconds more and then we proceed. Any questions, please ask me. Okay, now let's look at each of the points that we discussed in detail. Separate legal entity. When a company is registered, it is clothed with a legal personality. It comes to have almost the same rights and powers as a human being. Like the important point here is almost. Okay, the same rights and power as a human being, and its existence is distinct and separate from that of its members. A company can own property, have bank account, raise loans, incur liabilities, and enter into contracts. Perpetual succession. Members may die or change, but the company goes on till it is wound up on the ground specified by the Act. The shares of the company may change hands initially, infinitely, but that does not affect the existence of the company. Since a company is an artificial person created by law, law alone can bring an end to its life. Its existence is not affected by the death or insolvency of its members. I've already explained this to you, right? Members may come and go, shares may be transferred infinitely and transmitted infinitely, but that does not bring an end to the life of the company. A company has been brought up by a legal process and has to come to an end through a legal process itself. Limited liability, this is an important point from the exam point of view as well. The liability of the member depends upon the kind of company in which he is a member. We know that company is a separate legal entity which is distinct from its members. Thus, in the case of a limited liability company, the debts of the company in totality do not become the debts of the shareholders. In no case can the shareholders be asked to pay anything more than the unpaid value of their shares. This is the case in a company limited by shares. Okay, so whatever, let's say the person holds 10,000 shares. The face value of the share is 10 rupees per share and he has only paid 8 rupees per share. So what is the amount remaining unpaid on the shares held by him? It is rupees 2. So his liability at any given point of time is 10,000 shares into 2, 20,000 rupees. And after he pays the 20,000 rupees to the company, he has no liability whatsoever. That is the case of a company limited by shares. Then, in the case of a company limited by guarantee, the members are liable only to the extent of the amount guaranteed by them. That too when the company is into liquidation. So, now what are the kinds of companies? Firstly, it is a company limited by shares. Then you also have a type of company known as a company limited by guarantee, in which the maximum amount that a shareholder or a member is liable is that the amount that he has committed to pay in the memorandum of association, and that too only at the time of winding up of the company. He can be called upon to pay that amount only when the company is being wound up and not before that. And however, if it is an unlimited company, then the liability of the members is unlimited as well. So we also have another kind of company which is an unlimited company, but in which the liability of the members is unlimited. But these kind of companies are rare because the majority of the companies that are in existence today are limited liability company, a company limited by shares, or a company limited by guarantee. Okay, please take 2 minutes, go through this. Any questions, please ask me. Any questions you may have, please ask me. Please take 2 minutes. Carefully go through this. These are very important terms. And to understand what you mean by corporate veil, it is very important for you to understand the features of a company. Only then you can understand what a corporate veil is. Let me know once you're done, please. Please take another minute. Carefully go through this. Take another minute, please. Carefully go through this. Any questions, please ask me. Are we done? Let me know once we're done, please. Okay, let's move on. Now, then the fourth and the fifth features, artificial jurisdictional person. A company is an artificial person as it is created by a process other than natural birth. It is a legal or judicial as it is created by law. It is a person since it is clothed with all the rights of an individual. So like I told you, it's not come into existence like you and me, like natural birth. It has come into existence through paperwork, and it has been created by law. So it is an artificial jurisdictional person and which is into existence. Okay, you cannot see it or touch a company or feel a company. The common seal, a company being an artificial person is not bestowed with the body of a natural being. Therefore, it works through the agency of human beings. Common seal is the official signature of the company, which is affixed by the officers and employees of the company on its every document. The common seal is a seal used by the corporation as a symbol of its incorporation. Okay, so common seal is a tool or a seal through which a company authenticates or approves documents. Obviously, it is used through the agency of people by the officers or employees of the company, and it is kept in the responsible possession of any senior person. Please take a minute, go through this. Any questions, please ask me. Any questions, please ask me. Let me know once you're done, please. Okay, are we done? Any questions? Okay, let's move on. Now let's start off with what do you mean by corporate whale theory? Okay, corporate whale refers to the legal concept whereby the company is identified separately from its members. We just saw that in the features of a company, right? The term corporate whale refers to the concept that members of a company are shielded from the liability connected to the company's actions. If the company incurs any debts or contravenes any law, the corporate whale concept implies that members should not be liable for those errors. Remember this slide what I showed you? Now this is what you call the corporate whale. Okay, this corporate whale is like a blanket or a wall that protects the companies from the liabilities and debts of the company in case the company has any wrongdoing or the company contravenes any law and there are penalties. So it is the companies alone. Okay, the members cannot be called upon to repay that amount. So that is what you mean by a corporate whale. Okay. If the company incurs any debts or contravenes any law, the corporate whale concept implies that members should not be liable for those errors. Okay. So this is what you mean by corporate whale. Now in this there is a leading case. If you all can remember this, please remember this case law. It is Solomon versus Solomon and Co. Limited. It is a very popular case law under the concept of corporate whale. Okay. So let's quickly go through this. The House of Lords laid down that a company is a person distinct and separate from its members. So we just saw it, right? Separate legal entity. In this case, one Mr. Solomon incorporated a company called Solomon and Co. Limited with 7 subscribers. So what happened in this particular case is this gentleman called Solomon started off a private limited company, Solomon and Co. Limited, and he had 7 members in that company. He, his wife, his 4 sons and 1 daughter. Okay, and before he started this company, he had a proprietorship business. The company took over the personal business assets of Solomon for pounds 38,782, and in turn, Solomon took 20,000 shares at £1 each. Debentures were 10,000 pounds of the company and the charge on the company's assets and the balance in cash. So basically, the company took over Solomon's personal business assets of 782, and in return, Solomon took 20,000 shares in the company at £1, 10,000 debentures in the company, and the balance in cash, that is 8,782 pounds in cash. This is how he settled this thing. So whatever personal business assets he had of 38,782 pounds, he put it in the company, and in return he took 20,000 shares, 10,000 debentures, and with a charge on the company's assets and the balance in cash, 8782. Now, the company went on doing work and everything was okay, but one fine day the company went into liquidation. That means the company's business did not work and it went into liquidation. So one of the unsecured creditors of the company, who was a supplier to the company, he raised an objection with the court that Salomon and Co. is nothing else but Salomon itself. So during liquidation, his debentures cannot stand above him in terms of settlement. Okay, that is what the unsecured creditor said. But the bank held that there is nothing like that. Once a company is formed, it becomes a separate legal entity distinct from its members. So it does not matter whether Salomon and his wife and his children were the members, but Salomon and Co. Limited is separate from Salomon and the other 6 subscribers. Okay, so subsequently the company went into liquidation due to general trade depression. The unsecured creditors, to the tune of £7,000, contended that Salomon could not be treated as a secured creditor of the company in respect of the debentures held by him, as he was managing director of a one-man company which was not different from Salomon, and the cloak and the company was a mere sham and fraud. So it was held by the court that there is nothing like this. Once a company starts off, it becomes a separate legal entity, distinct and separate from its members. So Salomon and his wife and his 5 children are separate from the wrong deeds and the liabilities of the company. Alright, please take 2 minutes, go through this. Any questions, please ask me. Let me know once you're done, please. Any questions, please ask me. Please take 2 minutes, carefully go through this and try and remember this case law for your examination under the corporate veil theory. Let me know once you're done, please. Let me know once you're done, please. Take another minute, carefully go through this. Are we done? Take another minute, please. Carefully go through this. Any questions you may have, please ask me. Are we done? Okay, let's proceed. Now, the lifting of corporate veil. Now this is the corporate veil I told you, right? This one. This is the corporate veil. Now, there are certain circumstances in which this corporate veil can be broken. Okay, so to know who really are the members behind it, to find out who really are the members behind it. So sometimes this wall known as the corporate veil can be broken to find out who the real members are behind it. Okay, so let's quickly have a look at what are those situations. Okay, the following are the cases where the company law disregards the principle of corporate veil personality or the principle that a company is a legal entity distinct and separate from its members. The situations are, so in these 5 situations, the law disregards the corporate veil, the wall, and it can find out who the real members are behind it and treat the company and the members as the same. First one, to determine the character of the company, whether to find out whether co-enemy or co-friend. So what happens now, who is a company managed by? Like I told you, a company is an artificial person, so it cannot function without the agency of people. So who are the people really behind it? The members. Now, whether if the members are from an enemy country, then obviously it becomes an enemy company. If the members are from not an enemy country, then the company does not become an enemy distinct. So at times when it appears to the law that the character of the company or the company is trying to affect the sovereignty or integrity of India, at that time it can break that wall, the corporate veil wall, to really find out who the members are behind that, and whether they are an enemy or whether they are a friend of the country. Okay, then to protect revenue or tax, many times there are a lot of things the company does to evade taxes. Now, if the company evades taxes, both indirect and direct taxes, that is a loss of revenue to the government. So when it feels to the government or the law enforcing agencies that the company is doing any act which is done to evade taxes or revenue to the government, the regulatory authorities might break that corporate veil wall to see who really are the people behind it and may penalize them for their actions. To avoid illegal obligations, many a times there are different acts which have different obligations, like your Payment of Bonus Act, ESI, PF, which is based on a number of employees. Okay, so let's say company A has 40 employees. So, and then obviously it will come under ESI and PF as well, Employee State Insurance and Employee Provident Fund. Now the company does not want to go ahead with that legal obligation. So what the company does, it forms another subsidiary and it transfers 25 to 20 employees from company A to company B. Hence, it wants to avoid the legal obligation of EPF. Now, when it appears to the law enforcing agency that this act is done purely to avoid legal obligation, they can break the corporate veil or remove the corporate veil behind both the companies and see who the real management is behind it. And if they find the same people behind both the companies, then they can conclude that this was done just to avoid legal obligation and they can penalize the members behind the company. Alright. Then formation of subsidiaries to act as agents. Now the company may form various subsidiaries in order to avoid taxes or evade taxes like that, and those subsidiaries purely act as agents of the company. So in case a company has a 100% subsidiary, then in those cases also the law enforcing agencies can break the corporate veil wall and find out who the people are behind that company. And then a company formed for fraud or improper conduct or defeat the law. So where it appears to the law enforcing agencies that any company has been formed purely for fraud or improper conduct or to defeat the laws, in that case they can break the corporate wall and find out who the real members behind it are. Okay, please take 2 minutes, go through this. Any question, please ask me. Any question you may have, please ask me. Please take a minute. Any questions, please ask. Please take a minute more. Carefully go through this. Take a minute more, please. Sorry. Let me know once you're done, please. Are we done? Okay, let's move on. Now let's discuss each of them in detail. To determine the character of a company, that is to find out whether co-enemy or friend. It is true that unlike a natural person, a company does not have a mind or conscience. Therefore, it cannot be a friend or foe. It may, however, be characterized as an enemy company if its affairs are under the control of people of an enemy country. For this purpose, the court may examine the character of the persons who really are at the helm of the affairs of the company. That means behind the company's operations. To protect revenue and tax in certain matters concerning the law of taxes, duties and stamps, particularly where question of the controlling interest is arising. So in case where it appears that any act is being done in order to evade taxes or revenue, then the corporate veil might be broken to find out who the real members are behind the company. To avoid a legal obligation where it is found that the sole purpose for formation of the company was to avoid a legal obligation, like I told you, ESIPF, the court can order the piercing of the veil to look into the real transaction. Okay, these are 3 points. There are 2 more. Please take about 2 minutes. Go through this. Any questions? Please ask me. Any questions? Please ask. Any questions? Please ask me. Let me know once you're done, please. This is an important question from the exam point of view as well. Okay, just about 30 seconds more, then we proceed. Let me know once you're done. Okay, then ignore this slide. Then formation of subsidiaries to act as agents. A company may sometimes be regarded as an agent or trustee of its members or of another company and may therefore be deemed to have lost its individuality in favor of the principal. Here, the principal will be held liable for the acts of the company. So, in case a company has a 100% subsidiary, then in that case, the holding company will be held liable for the acts of the company. where any company formed for improper conduct or to defeat the law, where the device of incorporation is adopted for some illegal or improper purpose, that is to defeat or circumvent law or to defraud creditors or to avoid legal obligations. In such a case, the corporate veil can be broken or lifted to find out who the real people are behind the management of the company. Please take a minute, go through this. Any questions, please ask me. Let me know once we're done, please. Okay, let's move on. Now, let's have a look at a few case laws where supporting the various theory that we read so far. The prevention of fraud and improper conduct. So this was the case where it appeared in order to prevent a fraud and improper conduct, the corporate veil was lifted to find out. This is a case study. In Guilford Motor Company versus Hone. Hone had been employed by the company under an agreement that he shall not solicit customers of the company or compete with it for a certain period of time after leaving its employment. After ceasing to be employed by the company, by the plaintiff, that is Guilford Motor, Hone formed a company which carried on a competing business and caused the whole of its shares to be allotted to his wife and an employee of the company who were appointed to be its directors. It was held that since the defendant, that is Hone, in fact controlled the company, its formation was a mere cloak or sham to enable him to break his agreement with the plaintiff. So accordingly, an injunction was issued against him and against the company he had formed, restraining them from soliciting the plaintiff's customers. Okay, so let's have a look at this case. Now what happened, there was a company called Guilford Motor, which is this, and it had an employee called Hone. So when the employee joined that company, they made him sign a contract saying that whenever he leaves the company, he will not carry on a competing business with the company for a period of time after his employment, or he will not try to steal the customers of the company. So Hone agreed to that. He signed the agreement. So one fine day, Hone quit the company, and obviously he had the contract, right? Because the company had made him sign the contract that he will not steal the company's customers, or for a particular number of years will not carry on competing business. So the company expected, Guilford Motor expected Hone to honor that agreement. But what Hone did immediately after quitting his job, he started a company in the competing business, and instead of him becoming the shareholder, he made his wife the shareholder of the company as well as one employee of Guilford Motor. Okay, and he made both of them itself the directors of the company. So obviously, and then he started soliciting clients of Guilford Motor. Obviously, Guilford Motor did not like this, so Guilford Motor went to the court and they said, so and so Hone is doing it. So what did the court do? The court lifted the corporate veil. It lifted the corporate veil to find out who really are the members behind it. So even though the court lifted the corporate veil and it found Hone's wife and the employee as shareholders there, but the court wanted to get the real controller of the company. So the real controller was Hone, right? Because Hone's wife was the shareholder and director, so Hone could dictate terms to her. So in that case, the court found that the company is being controlled by Hone itself, and so it passed an injunction order. Injunction order is a stay order against him and the company that he formed, restraining them from soliciting the plaintiff's customers. So basically, the court passed an injunction order that Hone and his company should stop or should not solicit the Guilford Motors customers. Okay, so this was one case in which the corporate veil was lifted in the order to prevent fraud and improper conduct. Please take a minute or two, go through this. Any questions, please ask me. Any questions, please ask me. Please take 2 minutes. Any questions? Please ask me. Any questions? Please ask. Take another minute. Are we done? Take another minute, please. Carefully go through this. Let me know once you're done, please. Okay, let's move on to the next case study. Similarly, in Jones versus Lipman, the seller of a piece of land sought to evade specific performance of a contract for the sale of the land by conveying the land to a company which he formed for the purpose. Initially, the company was formed by third parties and the vendor purchased the whole of its shares from them, had the shares registered in the name of himself and a nominee, and had he and the nominee appointed directors. It was held that specific performance of the contract cannot be resisted by the vendor by conveyance of the land to the company, which was a mere facade for avoidance of the contract of sale, and specific performance of the contract was therefore ordered. So basically, there was a contract between two people, Jones and Lipman, and Jones was supposed to sell a piece of, Lipman was supposed to sell a piece of land to Jones. Now, over a period of time, I think the value of the land went higher or whatever, and Lipman did not want to sell that land to Jones. So what he did, he started a company initially in the name of third people, and he conveyed or he transferred the land to that company, just because he did not want to sell it to Jones. And later he said, no, it's gone to the company, now I can't do anything about it. So the company has to decide. So what Jones did, Jones took the contract between Jones and Lipman to the court and filed for it. The court lifted the corporate veil and found out that Lipman was the person who was behind the management of the company, and said that Lipman cannot avoid a contract just by transferring a land to his own company, which is a sham. So in that case, the court ordered for the specific performance of the contract by Lipman. Okay, please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask me. Let me know once you're done, please. Any questions, please ask me. Carefully go through these case laws. I'm doing it exclusively for you. Are we done? Okay, take another minute. Take another minute, please. Let me know once you're done. Okay, let's move on. Then, now here is the case where the corporate veil was lifted when there was a formation of subsidiary only to act as agent. Case study. In Merchandise Transport Company, Transport Limited versus British Transport Commission. A transport company, that is Merchandise Transport Limited, wanted to obtain licenses for its vehicles, but it could not do so if it made the application in its own name. So basically, Merchandise Transport Limited had certain vehicles and it wanted to apply for licenses in its own name to the British Transport Commission, but if it applied in its own name, British Transport Commission would not give them the licenses. So therefore, it formed a subsidiary company and the application for the license was made in the name of the subsidiary. So what Merchandise Transport Limited did was it formed a 100% subsidiary and the application for the licenses was made in the name of the subsidiary. The vehicles were to be transferred to the subsidiary, held the parent and the subsidiary company were one commercial unit and the application for license was rejected. So it appeared to British Transport Commission that it's the same management that is behind Merchant Transport Limited and its subsidiaries who was making the application. So they took them to court, they filed an application, and when the corporate veil was lifted, it was found that the parent and the subsidiary company were one commercial unit and the application for licenses were rejected. Okay, then in state of UP versus Renusagar Power Company, the Supreme Court held that when the holding company holds 100% shares in a subsidiary company and the latter is created only for the purpose of the holding company, corporate veil can be lifted. So, in this case, state of UP versus Renusagar Power Company Limited, the Supreme Court placed a precedent saying that where the subsidiary company is a 100% subsidiary company and it is created only for the purpose of the holding company, so in such cases, the corporate veil can be lifted to find out who the real owner is or the real management behind the company is. Okay, so these are situations in which it can be done. Please take 2 minutes, go through this. Any questions, please ask me. Any questions you may have, please ask me. Hi Ranveer, how are you? Yeah, what's your question, Ranveer? Please comment on scope of CMA after budget in the sense what? Please explain your question, I will comment on it. चलिए बताइए रणवीर, where do you want my help? Ranveer, you're there? Okay, please go through this, take another minute and then we continue. Okay, tell me, because as per, by CMA you mean CWA, right? Cost and Works Accountant earlier. Okay, so why do you think after the budget it is not what doing it, Ranveer? What happened in the budget? What makes you think it is not? Tell me. Okay, so that's not the only thing what a CMA does, right? So if it is, so even if that is not required anymore, but it's not like it's not required anymore, but the threshold has been increased. So, but that's not the only thing that a CMA does, right? A CMA does 100 other things. So if you're really planning to do a CA or a CS or a CMA, that is erstwhile CWA, I think you should go ahead. Why not? No, this one thing does not change anything, Ranveer. A professional course is a professional course and will always remain a professional course. Okay, and for them the demand is never ending for CA, CS and CWA, CMA. Alright, so I am a CMA myself. Okay, so I'm telling you, I am a CA, CS and a CMA and as well as a LLB. So I'm telling you that the value and demand for professionals will never come down. You can either do your CA, your CS or your CMA. Alright? Ranveer, I will have to take that in another session. This is a particular topic going on. I will have to take that separately for you. Okay? In the meantime, you can look online to find out what jobs the CMA can do. I will take that session separately. Okay? Are we done? Alright. Now, in the next case law, in JR Exports Limited versus BSES Rajdhani Power Limited, the appellant number 1 company acquired the entire, so JR Exports Limited acquired entire share capital of appellant number 2, which was registered consumer of electricity connection granted at its factory premises. And on finding out that electricity was being consumed by appellant number 1, Electricity Board passed an impunged order demanding subletting charges from appellant number 2. Court held that by applying the principle of piercing corporate veil, both companies appear to be the same entity and therefore there was no question of subletting. So what did this entity do? JR Exports Limited acquired the share capital, entire share capital of the second company. Okay, so it became 100% subsidiary. In the name of the second company, there was an electricity connection in the same premises. Okay, now what happened? This electricity was being provided by BSES Rajdhani Power Limited to the second company, but now even JR Exports started using the company, the electricity. So what the electricity company did, it sent a notice to the second company saying that you are subletting the electricity to another company. So the matter went to the court. The court held that where the first company has taken over the second company 100% and the corporate veil can be pierced, it is the same management. So it is the same company. So in that case, the court decided that when it is the same company, same entity, there can be no question of subletting. Alright, please go through this case law, take 2 minutes. Any questions you may have, please ask me. Any questions, please ask. Please take 2 minutes, go through this. Let me know once you're done, please. Let me know once we're done. Take 2 more minutes, please. Okay, are we clear? Any questions? Okay, take 30 seconds more. Okay, now these are the cases in which the corporate veil was lifted in order to protect of revenue. This is quite a famous case law. If you remember this, please. In Sir Dinshaw Manikji Petit, the SSC was a millionaire having huge income by way of dividend and interest. That means he had a lot of investments from which he was getting dividend and interest. Now, obviously, if it was all coming to him, he was paying a lot of taxes, so he wanted to avoid the taxes. So what he did, he started 4 private companies and transferred his investments to each of those companies in exchange for shares. So he himself started 4 companies and he divided his investment by 4 and he gave it to all the 4 companies and in return took shares of those companies. So now the investments were in the company's name, right? So the dividends and the interest was earned by the companies, not by Sir Dinshaw Manikji Petit. And then whatever money was earned by those companies as dividend and interest, he started taking that money as loan from the companies. He thought by doing this he can evade the taxes. The dividend and interest income was received by Sir Dinshaw Manikji as a pretended loan. It was held that the company was formed by the SSC purely and simply as a means of avoiding tax, and the company was nothing more than an SSC himself. It did no business, but was created simply as a legal entity to ostensibly receive the dividends and interest and to hand them over to the SSC as pretended loans. So when the corporate veil was lifted, it was found that the same person was behind all 4 companies. That means the management was the same. So it was held that this is nothing else but sham companies which were created just to avoid or evade taxes. So similarly, it was held that all the taxes all the income will be taxed in the hands of Sir Dinshaw Manikji Petit. Similarly, in CIT means Commissioner of Income Tax versus Sri Meenakshi Mills Limited, where the veil has been used for evasion of taxes and duties, the court upheld the piercing of the veil to look into the real transactions. Okay, so these are 2 more case laws for you. Please take 2 minutes, go through this. Any questions? Please ask me. Any questions you may have, please ask me. Please take a couple of minutes, carefully go through this. Let me know if you have any questions, please. Take another minute, please. Any questions you may have, please ask me. Take another minute, please. Any questions, please ask me. Carefully go through these 2 case laws. Are we done? Okay, let's proceed. Now again, let's look at the case study on when the corporate veil was lifted to prevent economic offences. In Santanu Ray versus the Union of India, it was alleged that the company had violated Section 11A of the Central Excises and Salt Act 1944. The court held that the veil of the corporate entity could be lifted by adjudicating authority so as to determine as to which directors was concerned with the evasion of the excise duty by reason of fraud, concealment, or willful misstatement or suppression of facts or contravention or provisions of the Act and rules made under. So what had happened in Santanu Ray versus Union of India, there was a company, and the company had violated Section 11A of the Central Excise and Salt Act. That means payment of those taxes. So then the court held that the corporate veil can be lifted to find out that who was the particular director in the company who was responsible for such a fraudulent or improper transaction in the company. So out of all the directors, the corporate veil was lifted, the management was seen, and then it was decided that this particular director called Santanu Ray was the one who was responsible for the evasion of taxes and so it was held that in such cases where you want to know who the real person behind that thing was, the corporate veil can be lifted and it can be ascertained as to who is the real culprit behind the transaction. Please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Please take another minute. Okay, next one. A company avoiding welfare legislation's case study. The Supreme Court in Workmen of Associated Rubber Industry Limited versus Associated Rubber Industry Limited held that where the sole purpose of the formation of the new company was to act as a device to reduce the amount to be paid by way of bonus to the workmen, the court can rightfully pierce the corporate veil to look at the real transaction. Now, this was a case where a transaction was being done to avoid a legal obligation by the payment of bonus to workmen. So, see, there are various acts which are applicable to a company or not applicable to a company based on the number of employees they have. Okay, so what companies try to do, they try to start off another company and they try to transfer the employees to the other company so that in both the companies the number of employees is minimum, the threshold limit, so that act will not be applicable to them. So similarly in Workmen of Associated Rubber Industry versus Associated Rubber Industry Limited, the Associated Rubber Industry Limited tried to do that. They tried to transfer the employees to another company so that the legal obligation threshold was not breached. And then the workmen of the Associated Rubber Industry, that is the trade union, went to the court, and when they went to the court lifted the corporate veil and found that both these companies had the same management and it was done purely to avoid or evade the legal obligations. So the court held that nothing doing, they have to, it is the same company because it's run as the same management, so they have to fulfill the legal obligations. Okay, please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask me. Let me know once you're done, please. Okay, now, company used for improper or illegal purpose. In PNB Finance Limited versus Sheetal Prasad Jain, pursuant to a request made by S, the financial advisor of a financial public limited company, granted a loan of 50 lakhs to S on his representation that he would utilize the said amount for purchase of immovable property in Delhi, and the directors of the plaintiff company sanctioned the loan. So PNB Finance Limited sanctioned the loan to S rupees 50 lakhs. He said he's going to use that money for purchase of immovable property. S also executed a promissory note. However, he did not pay a penny to the loan or the interest. Instead, he diverted the amount of the loan to 3 public listed companies floated by him and his son. He, in fact, in the garb of the companies, used the loan amount for purchasing the immovable properties at New Delhi. The question that arose was whether the defendants could be restrained from alienating the properties purchased. The court granted relief to the plaintiff by piercing the corporate veil and restraining the defendants from alienation, transfer, disposal, or encumbering of the properties in question. So what had happened in this question? One, Mr. Sheetal Prasad Jain went to PNB Finance and he said, I want a loan for 50 lakhs for purchase of immovable property in Delhi. Okay, so the PNB Finance checked the documents, everything, they gave him a loan on the condition that the loan would be secured by deposit of the title deeds of the property. So basically it was a loan against the property. So what the court said, you purchase the immovable property and the papers will be deposited with us. S also executed a promissory note, but then once the loan was taken, X did not pay a single rupee of interest or the principal, but instead he diverted the amount of the entire loan, 50 lakhs, to 3 public limited companies floated by him and his son. Okay, he in fact in the garb at the companies used the loan amount for purchasing immovable properties at Delhi. So that 50 lakhs, he put it into 3 companies which was floated by him and his son, and he purchased immovable properties in those 3 companies. Okay, so basically he cheated PNB Finance. So PNB Finance went to the court and they filed a case. The court lifted the corporate veil of those 3 companies in Delhi, and he found that Sheetal Prasad Jain and his son were the people behind the management of the company, and the court granted relief to the plaintiff by piercing the corporate veil and restraining the defendants from any alienation, transfer, disposal, or encumbering of the properties in question. So what the court said, okay, you bought the property in the name of those 3 companies. Now you cannot transfer, sell off, or dispose those properties, and those properties have to be handed over to PNB Finance for the purpose of the loan. Okay, please take 2 minutes, go through this. Any questions, please ask me. Any questions you may have, please ask me. Take another minute or so, please. Carefully go through this. Let me know once you're done, please. Are we done? So now we are looking at case studies or situations in which the corporate veil can be lifted by the courts to find out who the real people are behind the company. Please take another minute on this. Any questions you may have, please ask me. Carefully go through this, please. Take about 30 seconds more and then we proceed. Okay, then let's look at company acts as a mere sham or cloak. Another case study. The Supreme Court in Delhi Development Authority versus Skipper Construction Company held that directors and members of the family had created several corporate bodies did not prevent the court from treating all of them as one entity belonging to and controlled by the director and his family. If it was found that these corporate bodies were mere cloaks and the device of incorporation was really a ploy deployed for committing illegalities or to defraud people. So in this case, Delhi Development Authority versus Skipper Construction Company, it was held that the director and his members of the family had floated various companies in and around Delhi, and this was done purely as a ploy adopted for committing illegalities or to defraud people. So the Supreme Court held that when so many companies have been found by the same directors and members of the company, the corporate veil can be lifted easily to find out who really are behind the company, and more often than not it will be a ploy adopted for committing illegalities or to defraud people. Okay, please take a minute, go through this. Any questions, please ask me. Any questions? Anyone? Any questions? Please take a minute, go through this. Let me know if you have any questions, please. Okay, so if there are no questions with you, we will stop this session with this. Thank you so much for being a wonderful audience. Please do not forget to use the code Prathik to get an instant discount of 10% when you make your Plus subscription with Unacademy. And also, once again, I'd like to welcome you to Crack CA Exams with us, which is a vertical and channel of Unacademy that caters to the students of CA Foundation and Intermediate in their journey and pursuit of preparation for the CA Foundation and Intermediate examinations by providing top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. And I'd also like to thank each one of you for being a wonderful audience today, and I hope you found the session useful. In case you have any queries or observations, you can always write back to me and I will be happy to address them for you. Okay, next we have a special class in the next half an hour on performance of contracts under the Indian Contracts Act 1872. So I request all of you to attend my session on the Unacademy Learning app and also click on the follow button on my profile. Thank you so much and have a great day.